Hello, and welcome to today's Family Matters show. Today we are talking about protecting your family. Specifically, we will be focusing on issues involving life insurance and how it can be utilized to protect your family and fund care for it after you are gone. Stay tuned to discover insights from an experienced insurance professional with regard to the types of insurance, the benefits of each, and a cost effective means to protect those whom you love. I am Jeff Rehmeyer. I'm an attorney and the president at the CJ Law Firm. Historically, my practice has involved business, real estate, and estate planning. Now, I'm emphasizing my focus on estate planning to include planning for young adults. On today's show, we have Gregory Nicholas. Welcome, Greg.
Well, thank you. Appreciate you having me, Jeff.
By way of background, Greg started his insurance career as a Prudential life insurance agent at the young age of 18, and he's had a good 20-year run since.
Couple of years there.
20 plus years.
Yes.
In 1983, Greg founded Nicholas Insurance LLC. He holds a certified insurance counselor designation as well as a financial services certified professional designation. Greg and his team have been serving the New York community for over 30 years and have over 7,500 clients. His passion is making sure that his clients are protected from the uncertainties in life and that families are secure when a loved one passes away. Again, Greg, thank you for joining us. So help us understand what made you decide to get into insurance at the age of 18.
Well, nobody goes to school and says, I want to be an insurance agent when I grow up. But I did enjoy helping people. I enjoyed sales, and I enjoy problem solving. So all those things together led me to the insurance world, and I figured I would try it. I was the youngest agent they ever hired in Prudential in New York, and so they said I'll either do really well or really bad, and apparently I'm still here. So I've enjoyed the business, enjoy helping people, and that's my passion. So
that's excellent. Well, we've known each other for a few decades as well, having met in the 90s.
Yes.
And obviously I've held you in high esteem ever since then. Can you take a few minutes and just tell the people watching what your day looked like yesterday at work, what sort of things you completed and did?
We did several proposals for families to protect them. But my biggest thing I had yesterday, I did have a death claim that I had to take care of. So invited the family in, gave them my condolences, and helped them with the plan that we had set up. So, part of this is when you buy the life insurance, I also like to be on the other end that I make sure it completes the plan. So yesterday was part of completing the plan and what I had promised the client. So you buy this life insurance, you buy it for the family left behind, not for yourself. So I was completing his plan for him. So.
How has the field of insurance changed throughout your career? If you had to look back over the decades you've been doing this, what's really evolved?
Probably the technology part has evolved a lot. But more than that, I think there's less people in the field. We went to your house and sold you life insurance. We stopped every week. We collected your premiums. All that has gone away. So, good and bad with everything. Good is you can go online and you can look at things at night. Bad side is you don't really have people to reach out to get some advice. So you don't know what kind of policy you should buy, how much should I buy, why should I even have it? There's a lot less education and a lot less professionals to reach out to.
So for your clients, they have access to systems and information electronically through different platforms, but then they can also dial a phone number and they can get you or a member of your team live.
Yes, because that's the biggest part of it is, especially when you're putting together an estate plan. The estate plan and the life insurance work together. So we're the funding mechanism. You guys are the plan. So that's kind of how that works.
I agree. Okay, well let's dive into really what I wanted to get from you today, which was an overview on different types of insurance that people can obtain, so they can start to understand a few of the options and how they can be used to protect their families.
Okay, basic types of life insurance: you have term, you have whole life, and then you have universal life. There are hybrids of all of those out there, but mainly the term insurance is what I recommend most for young families. They can buy the most amount of insurance to cover their need, and it's cost effective. As they move through life, you can make changes to that. But term is kind of like renting your insurance. So renting and leasing is not a bad option if you don't want to spend a lot of money. It's
Hmm.
cost effective. The whole life policy, you pay on that all through your life. It's permanent. It can't be changed. Once you set the premium, it goes forward, and it's very consistent. The universal life came out of the idea of what if I want sort of a hybrid of both? Universal life gives you the ability to change the premium. You can put in lump sums. You can stop paying the premium. You can say, I want it to end at a certain date. So gives the customer a lot more options as to what they want to do with it. But primarily for a young family, most settings, I will sit down and start them off with term insurance because honestly, what we're selling here is protection. We want to make sure that if they aren't there to take care of their family, the life insurance steps in and takes care of the things they had set up and planned.
So term by its name means the insurance is in place for a fixed window of time, and that window may close before you die.
Right. And it's you could do anything from 10 years to 40 years. I have a carrier that now has a 40-year term, which is almost unheard of. But
Hmm.
people are living longer, so you're going to see that span keep going up. So,
So if we have a young couple that's starting a family and they just have a baby, then what sort of recommendation might you offer them?
when I sit down with them, I say the whole purpose of your life insurance, to make it real simple, we're not going to run a bunch of charts and graphs and drive you crazy with that. It's very simple. What you want to do, you want to make sure that you have enough life insurance to cover all the debt you have, and then to provide an income stream for the family left behind. And
Hmm.
that income stream needs to take into consideration college funding, things that may happen, all the stuff in life that is part of living. And you're going to have a car payment, you're going to have all those things. So we plan an income stream and then decide what kind of a lump sum we need to fund that income stream for them.
Okay. And then that term policy may be in place, what, for 20 years, 25 years until that young child is what, through college and
Yes.
established on their own?
Yep. And then we sit down and we do planning every 2 to 3 years to update that plan and tweak it, because the funny saying, life is what happens while you're making plans. So
Hmm.
as things change, I like to sit down with my clients and say, hey, listen, if you have a life event that happens, we need to get together and see how this affects your plan. So
That's a good point, Greg. Just for those of you who are watching, we have had a connectivity issue. Hopefully, Greg will be right back, and I will segue with my next question to him.
I apologize. I'm back. World of technology. So
Welcome back. So I paused for a moment. I did indicate to those who are watching that you're having a connectivity issue, and we've tried to resolve that. And we both love technology as much as everybody else does. Um,
yes,
with regard to your comment on talking every 2 to 3 years, it's interesting you say that, and I'm glad you did, because one thing that comes up when I talk to people about their planning is the idea that you shouldn't just set it and forget it. You need to
correct.
actively consider your situation, and you can make updates, and you should make updates, and you keyed on life events. Just so people watching would know, what would you consider to be life events that might cause you to revisit your insurance planning?
Well, very importantly, a divorce. Um, I've had people that have left the ex-wives on the policy. I've had a guy that had, three ex-wives, and the insurance policy was still listing the first wife. So that can be a real problem, and
Hmm.
someone passes away. So, but having a child, inheriting funds, if you decide that you're going to make a trust, those are all times you want to sit down and look at these things. If you buy a business, almost anything that's a life event that affects your finances, is you ought to just at least give me a call. Just say, hey, Greg, I'm doing this. What do you think? Do you do anything and change it? May say, nope, you're good. We'll go forward. But if not, we'll make that change for you. And that's what you have me there for, as a resource for.
Hmm. Am I correct in thinking that, as a client of yours, that if I have an issue, you're a first round go to person for me, despite all the technology being available?
Absolutely. Yeah. The
Okay.
technology is there at the application process. So if you don't want to have to disclose all your medical issues or anything, we send you a questionnaire now. You fill it out online in the privacy of your home. That's sent to the underwriter, and then they produce the policy and rate it based on what's there. So that's done. That's a lot more comfortable for the client. They don't have to sit there and disclose all that thing to anybody. So that's the technology piece. That moves along very quickly. Records are electronic today, so they come back from the doctor very quickly. So
Mhm.
we can have an answer on a policy. A lot of times I've written them at 10 o'clock in the morning. If a person has no history, that policy will issue by 2 o'clock in the afternoon. It's amazing.
Okay. So we had talked a few minutes ago about term, whole life, and universal.
Yes.
Can you just give us a hypothetical example on a young family getting insurance? What sort of dollars are involved, and maybe some numbers? You had said cover the debts, get an income stream, but can you give an example of the kind of coverage that might
Sure.
actually be?
Sure. So I did $1 million on a family just last week. The gentleman was 35 years old.
Mhm.
Sounds like a huge amount of money. $1 million broken down at 5% is going to pay $50,000 a year on an income stream.
Mhm.
So looking at it that way, that policy cost him $38 a month. So for the price of a couple of visits to Starbucks,
Mhm.
I guess I'm going to have to learn to talk faster. I don't know.
You're $38 a month,
Yes,
or a couple of visits, I assume, with a little bit to eat to Starbucks, you could get $1 million worth of coverage, which
absolutely.
you had said sounds like a lot, although $50,000 a year could be stretched in today's economy.
Yes. So
Okay.
that's just one example. You can add children's riders. You can put the wife on there. You can have it all put together in one policy. So
So let's flash forward, and let's say that you have children that are 18 and they're getting ready to go to college, and you spend some time saving, so you have college covered. What
yes.
sort of coverage might a parent want to have in place when their child turns 18 and um, is going to college?
Well, the parents still want to have some coverage there. A lot of kids still take out college loans. I mean,
Mhm.
it's very expensive today to go to college, and if there's funding out there, especially if the parents co-sign on the loans,
Mhm.
and you have a situation, God forbid, your student passes away there, and you've co-signed for that, they're still going to look to you for that obligation. So
Mhm.
I always say to kids, please get some coverage. Buy a 10-year term. You can buy a couple $100,000 a term for $15, $20 a month. It's very, very inexpensive. The younger you buy it, the better off you are, and it carries longer into life for you. You can use it towards a mortgage, all kinds of things. So
So a lot of my work, and I alluded to this earlier, is helping parents with children that are going to college,
yes,
and parents with children turn 18, because, as you know, when you join Prudential at the age of 18, you are legally an adult.
yep,
Um, so one thing parents and students should keep in mind is, if you have those college loans and your parents are co-signing and something happens to you, there's that debt obligation,
yep,
and there's no way to pay it back, because if the child dies, which of course would be catastrophic, but if that happens, then you have the debt. You don't have the child with the benefit of that education to earn money to cover the loan.
correct, yes,
And I would say, just for purposes of this talk, I have had clients with students who die in college, and I've also had clients who plan around their child being in college and don't update it. And I would say that
yeah,
just recently I met with a man who got married to a woman, and she was his third husband. And they did planning in the 1990s, and it very much centered on her child's completion of his college education, which he did. But
yeah,
she died last month. And the will was written in such a way that it was favoring that child, because it assumed he was in college. And in fact, there was a school loan for which there was liability that's now attached to the estate.
yeah. I always give the example to my clients. I'm like, if you would buy a car, would you drive that 15 years and never change the oil or do any maintenance? And
Mhm.
obviously, their answer is no. It's like you need to do maintenance on this stuff too. So
So a few takeaways I'm hearing. One is, keep an eye on it, periodically updating, and consider life events, which would include incurrence of big debt or big changes in your family situation.
Yes.
If I'm an adult and my child's heading off to school, and perhaps I had term insurance, what do I want to consider at that juncture? Is there something else I'd want to consider?
Well, you want to make sure that you've done some proper planning on the will aspect and that type of thing, and also do some planning for yourself. You need to have that discussion with your child. I'm only going to fund this for 4 years. At the end of that, you're going to go on and continue on. That's going to be your dime. But you want to have some plans there on how that's going to happen, and it needs to be discussed with everyone.
Hmm.
The time to find out who the beneficiary is not when the person passes away. So we've had that in situations too. So if you're going to be naming someone, if you're going to ask someone to step in and say, I want you to handle part of my estate,
Hmm.
there's usually one of the children that you pick for that. You want to make sure everyone knows who's picked and why.
Okay. So we're back to the planning again. You had said update it periodically, and I agree with that. And then you also said have the conversations with those key family members that are going to help deal with your situation if something happens to you. Who's going to take the proceeds of that life insurance? How's it going to be used? Who's it going to benefit?
Yeah,
And
we
have the
have a we have a program called Money Matters that you
hmm
can upload all of your documents into an iCloud cloud form,
hmm
and everything is there. So if you passed away, you could give your kids that password. They could go in there and see everything.
hmm
Wonderful, wonderful tool. So you talk about things with technology, that's excellent. Rather than everybody rooting through the home trying to find the life insurance policies and say, where did people have money and things put away? So really
hmm
good tool. Really good tool.
That sounds good. I know that when I talk about planning, Greg, I recommend what I call a final instruction letter. And what
Yes.
that letter does is it provides some information on what the person wants to have happen. For example, what sort of funeral service, what sort of burial or cremation, remembrance. But it also goes on to list key people and key assets in one's life. And on that list is insurance agent.
Yes.
And on the asset list would be insurance because you're right. Part of what needs to happen is if somebody dies, it's a very confusing, catastrophic time. And you need information in a place that it can be gathered so people know what to do. And then, of course, if they find that and they know you're the person to call, they can call you up and then you can walk them through it just like you did with that death claim you handled yesterday.
Yeah. And when somebody passes away, what they have to realize is the only thing that's really liquid is the life insurance. That's the first liquid item you have, and that's the
Mhm.
whole purpose of it. So we can get you cash immediately. I mean, most of our death claims are paid out within 36 hours. So I mean, as long as everything is a normal claim, we're going to
Mhm.
process that quickly so that those funds are there and available to you.
That's a good point. You answered my question, which is how long, and I would totally agree with that. A lot of the estates that I help administer struggle because there's not enough assets, and that insurance proceeds is typically a quick funding liquid asset that can be used to address things like final expenses of an illness, burial, things like that, and create some money to live on if it needs for that too.
Yes, definitely.
Okay. Um, So you might have answered this a little bit before, but you would recommend considering life insurance at the age of 18 or 19, probably just to have some money to cover something unfortunate. And you said that at that age, it's an inexpensive protection to get.
Yes, definitely. And so if you're getting married or you're moving out, starting life on your own, you're going to start other things. Start the life insurance. It's
Mhm.
cheap and you can get it done, and then you have something going forward.
So when and why would somebody then shift or implement whole life insurance?
You would go to the whole life insurance when you get into your middle age, and you say, okay, there's a portion of this insurance I want to keep as a lifelong event. I want to
Hmm.
have it build some cash values. My kids are out of the house. I don't have this huge need anymore. My mortgage is paid down. I'm building up funds in my 401k. So maybe I just want permanent life insurance so that it's not going to run out on me. It's like
Hmm.
same reason you buy a house. You could lease an apartment for the rest of your life if you want to, but eventually you want to have something that has some equity in it. So the
Hmm.
whole life policy gives you some equity and has a permanent position in your life.
Hmm. And then that creates assets when you pass. Okay.
Yes.
So if that's the explanation on whole life, then how does universal fit into that picture?
Universal gives you a little bit more flexibility. So if you want to look at it in terms of a mortgage, it would give you the flexibility of saying, I want to go from a 30-year payment to a 15-year payment to putting a lump sum in and not paying anything.
Mhm.
Had a gentleman walked in and said, listen, you guys are paying 4.5% on your cash value. He said, I'm going to put $25,000 in here because I can't get that kind of an interest rate at my bank.
Mhm.
Okay. He's putting that in there, letting the interest pay his life insurance for the rest of his life. Great option.
Mhm.
So it gives you a lot more flexibility for the customer.
So he put the 25,000 in, getting the 4.5%. What's his life insurance amount?
That covers him for $150,000.
Okay.
And
All
he's
right.
a middle-aged person. He doesn't have to do any health qualifications for that. And his family knows that's a paid up policy. So,
Mhm. Okay. Um, so you talked about estate planning as well. Just had a cutout here. Sorry about this. He will be right back. Thank you all for bearing with me. Other broadcasts haven't encountered this issue, and Greg did try 2 different browsers.
back again. Sorry. Back again.
Okay, that's okay. So, you did talk about integrating with an estate plan. So when you meet with people to do the insurance planning, do you inquire if they have an estate plan?
Yes. Because the first thing I tell them is, you need a will and you need an estate plan. And the will is going to direct what happens. There are so many people that say, "Oh, I don't need a will." It's like,
Mhm.
yes, you do. You want your things to go the way you want them to go, not the way the state decides they should go. They may be two different things. So,
Mhm.
everyone, my first thing is you definitely need a will, and then after that, you step in with the estate plan. And that's where you talk about what happens if I'm injured in an accident. I can't make decisions for myself. All
Mhm.
those things that go as part of your estate plan.
So we're talking about the will, which dictates what happens to your family and your assets when you die. We're talking about the power of attorney that allows somebody to act on your behalf for financial, for
Yep.
legal matters. And then, I've done this in some other shows, Greg, the healthcare power of attorney and living will combination
Yes.
that deals with medical issues.
Yep.
Now, am I correct in thinking that when you're talking with somebody about their will, you are talking a little bit about the beneficiary designations on the insurance and how that might dovetail with the will, because
Correct.
the beneficiary designation is a payout contractually, and the will doesn't necessarily override that designation.
That's right. And a lot of times there might be a reason that they want to leave part to a charity, they want to leave part to a church, that kind of thing, and then have different things. Those things, rather than trying to break down 15 beneficiaries on a life insurance policy, it
Mhm,
makes more sense to name one entity and let the will direct how that's done.
mhm. Okay, very good. So we've hit a lot of the topics that I wanted to discuss today, and you've actually touched on issues that have come up in some of the other programs and that will come up in some of the programs. Are there any additional tips you'd like to offer people watching when it comes to considering life insurance and using it as a tool to protect their family?
Just that, just because you're young, don't think things can happen. I'll share a quick story. Had a gentleman I wrote, he was 30 years old, was a landscaper, big, healthy guy, would have filled the whole doorway. Wrote him for
Mhm,
life insurance in October, came in on a Saturday, convinced him to do the 750,000. His wife said, just buy the 750,000. We did. March of that year, he thought he had the flu. He went to the doctor, he had pancreatic cancer, and he died 2 months later. Um, that helped to pay off that lady's house, helped to set up an income for her that she's living on today, and have money set back that they could go to college. Um, the most rewarding thing I had was when she hugged me and said, "Thank you for making him buy that policy." So
mhm.
that's the rewarding part of what I do. But I always just tell people, please don't assume that just because you're young, you're going to live forever. Life happens, folks. So you need to make sure you have some life insurance. You're not buying it for yourself, you're buying it for your family that's left behind.
Interesting. The more you talk, Greg, the more I appreciate that certified insurance counselor designation that you have, because I can hear you talking about the insurance and its benefits in so many ways, as opposed to merely, I'm going to say selling it. And I don't mean that in a bad way, but
Yeah.
it really is a tool to be used judiciously and protectively. And I know I've always felt that way, particularly about the term with the young family. It's just hard to make ends meet when you have all those expenses, but it's so much harder if you would pass away and you're not able to support your family. And that's what the insurance can do for you.
Absolutely, absolutely. Life insurance is a love letter to your family. That's honestly what you're doing. So
Excellent. And I've never seen anybody be unappreciative of insurance when it's paid out.
no, I've never had anyone said, "I don't need this. I'll give it back." So,
Mhm. Okay. All right. Well, this has been fantastic, Greg. You've answered a lot of questions, gave a lot of insight with all of your experience. Thank you so much for joining me. Thank you for sharing your expertise. And that's going to complete today's broadcast.
okay. Thanks, Jeff. Thank you for inviting me.
My pleasure.